Welcome to Explain the Charts, where today, September 23rd, 2025, we're diving deep into Amazon, ticker Amazon, to understand its current position and future prospects. The market for tech giants like Amazon is always a battleground of conflicting forces, and the recent news surrounding Amazon certainly reflects this volatility. Let's start by looking at the broader economic landscape and recent corporate news that's impacting Amazon and the tech sector as a whole. Broader markets have been a mixed bag recently. While indices like the Dow, S&P 500, and Nasdaq have hit record highs, the Federal Reserve's recent rate cut, the first of 2025, comes with a caveat. The Fed signaled 2 more cuts could follow, primarily driven by a weakening labor market and job seekers feeling awful, suggesting underlying economic fragility despite market exuberance. Compounding this, President Trump's recently enacted 10% tariff on all global imports and a steep 145% duty on Chinese imports have caused significant headwinds for the Magnificent Seven tech firms, which collectively shed $2 trillion in market capitalization. Amazon, with its high exposure to China, sourcing 30% of its gross merchandise value and 14% of its ad spending from China-based businesses, is particularly vulnerable to these tariff impacts. Raymond James notably downgraded Amazon shares from strong buy to outperform, reducing its price target significantly, citing these very tariff headwinds and limited AI monetization progress despite substantial capital investments. On the flip side, there's considerable bullish sentiment surrounding Amazon's strategic growth initiatives, particularly in artificial intelligence and robotics. Bank of America Securities, for instance, raised Amazon's price target to $248, citing the company's robotics push as a key factor to unlock billions in savings and improve profit margins. Amazon currently employs over 750,000 robots, handling 75% of customer orders, with projections of $16 billion in annual cost savings by 2032 through further automation. Truist Securities also issued a price target hike to $270, maintaining a buy rating, driven by strong North American revenue growth and sustained demand, with order frequency up 6% year-over-year according to their card data. Simplywall ST's analysis suggests Amazon is currently undervalued, with a discounted cash flow model estimating an intrinsic value of $266.62 per share, indicating a 13.2% discount to its current price. The announcement of Prime Big Deal Days for October 7th to 8th is also setting a positive tone, kicking off the holiday shopping season early and potentially driving strong Q4 performance. Now, let's transition from the news to the charts themselves, starting with the daily view to understand the broader trends and how these events have manifested in price action. Looking at the full daily chart, we can observe a significant upward trajectory for Amazon over the past year, aligning with the reported 19.4% gain over the last year and a staggering 101% jump over 3 years. However, this journey hasn't been without its sharp pullbacks and periods of consolidation. We saw strong upward momentum from late 2024 into early February 2025, pushing Amazon to highs around the $242.52 level. This peak was followed by a sharp downturn in late February and early April 2025, which correlates directly with the Raymond James downgrade and the escalating trade war news. Notice the heavy volume during these periods of decline, indicating strong selling pressure as market participants reacted to the tariff and AI monetization concerns. The stock then found significant support around the $160 to $170 level in early April, managing to bounce back and showing resilience before making another run upwards. Another notable drop occurred in early August 2025, from around $234 down to $211, potentially reflecting the late July Q2 earnings slump and broader, weakening labor market sentiment, impacting consumer spending expectations. Let's zoom in on that critical period between February 4th, 2025 and April 4th, 2025. on the daily chart to clearly see the impact of the Raymond James downgrade and escalating tariff concerns. The price fell sharply from its peak of $242.52 on February 4th, undergoing multiple significant drops, including one from $182.99 to $178.41 on April 3rd and further to $171 on April 4th, reflecting intense bearish sentiment. This range visually demonstrates the immediate and severe market reaction to the negative news, pushing the stock down dramatically before finding a base. Shifting to the 1-hour chart, covering the period from early September 2025, we can examine the recent, more granular price action. After the early August dip, Amazon showed a steady recovery throughout August and into early September, largely supported by positive analyst sentiment and strong revenue data from Truist Securities. We observe a strong bullish push on September 4th, with significant volume driving the price from around $231 to over $236 in just a few hours. This upward trend continued, but then on September 10th, we witnessed a sharp intraday reversal and a significant drop on high volume, plummeting from over $237 to below $230. This sudden move could be an early reaction to renewed concerns about the labor market or profit-taking after the strong rally, highlighting how quickly sentiment can shift. The $230 level appeared to act as immediate support after this sharp fall on September 10th. Currently, the price is consolidating around the $228 to $231 range. This hourly chart reveals the intraday volatility traders need to monitor, with strong impulsive moves followed by periods of correction or consolidation. Looking even closer at the 15-minute chart for September 22, 2025, we can see the very latest intraday patterns leading up to today. The day started relatively flat but experienced a sharp decline around 13:22 Universal Time Coordinated, falling from roughly $230.89 to $228.655 on considerable volume, indicating fresh selling pressure in the morning session. This quick drop established $228.65 as a new immediate support level, with subsequent attempts to rebound, facing resistance near $230. Throughout the afternoon and evening, the price largely traded sideways, hovering in the $227.50 to $229 range, suggesting a battle between buyers and sellers around this key psychological level. The low volume during these consolidation periods indicates a lack of strong conviction in either direction post-decline, which is typical before a clearer trend emerges. For short-term traders, the recent support at $228.05 and resistance at $229.50 on this time frame are crucial to watch for breakout opportunities. The overall picture from the 15-minute chart shows that while Amazon remains strong long-term, short-term volatility and downward pressure are present, possibly reflecting caution ahead of upcoming macroeconomic data or news. Now, let's synthesize this information to formulate our bullish and bearish outlooks for Amazon. Reasons to be bullish include Amazon's aggressive investments in AI and robotics, which are projected to drive substantial long-term cost savings and revenue growth, particularly through AWS. The strong, sustained demand indicated by Truist's card data, coupled with Amazon's dominant marketplace model and superior logistics, paints a picture of continued operational strength. Furthermore, the consensus among several analysts, including Simply Wall ST, that the stock is currently undervalued based on fundamental metrics, suggests significant upside potential. The upcoming Prime Big Deal days in October are expected to provide a strong seasonal boost, initiating a favorable holiday shopping season. Conversely, reasons to be bearish center on geopolitical and macroeconomic headwinds. President Trump's stringent tariffs pose a direct and significant risk to Amazon's profitability, especially given its extensive global supply chain and reliance on China. Concerns persist about the limited monetization progress from Amazon's massive AI investments, as highlighted by Raymond James, meaning these billions in capital expenditures might not yield immediate returns. The broader weakening labor market and job seekers' negative sentiment could translate into reduced consumer spending, directly impacting Amazon's retail and advertising revenues. Finally, the potential for government shutdowns and other policy missteps creates an environment of elevated uncertainty, which can deter investment and pressure stock prices. For short-term traders, monitoring the $227.50 to $230 range on the 15-minute chart is critical, as a break above or below these levels could signal the next intraday move. On the longer-term daily chart, a key support level to watch is around $210, which previously acted as resistance and held during the early August dip. If Amazon can hold above $210, especially with higher volume, it would reinforce the bullish recovery narrative. Conversely, a sustained break below $210 could indicate a deeper correction, potentially towards the $195 level, which was Raymond James's downgraded price target and could become a psychological magnet. Resistance levels to watch are near $235 to $236, seen recently in early September's high, and then the $242.52 all-time high from February 2025. A strong break above $242.52 on robust volume would indicate a significant bullish reversal and a potential re-rating of the stock. The current trading action around $227 to $228 reflects the ongoing tug-of-war between strong fundamentals and macro headwinds. In summary, Amazon stock is at a crucial juncture, balancing strong internal growth drivers with external economic and political pressures. Important price levels to watch in the short term are $227.50 for support and $230 for resistance, particularly on intraday charts. For the mid to long term, critical support lies around $210, with significant resistance at $235 to $236 and the all-time high of $242.52. A break above $236, especially on the back of positive news regarding AI monetization or easing trade tensions, could push Amazon towards the analyst targets of $248 and even $270. However, a fall below $210, potentially triggered by worsening labor market data or increased tariff impacts, could see it retest $195 or even lower levels around $170 to $180. Keep an eye on upcoming economic reports, particularly consumer spending data and any developments regarding trade policies. Additionally, Amazon's specific updates on AI and robotics investments will be key to reinforcing bullish sentiment. The likelihood of hitting the $248 price target from B of A is moderately high, especially if Prime Big Deal Days perform well and AI monetization shows clearer signs of progress. Reaching the $270 target from Truist is plausible in the long run, contingent on sustained revenue growth and positive macro shifts. A downside move towards $195 is moderately likely if tariff pressures intensify or if the weakening labor market significantly dents consumer confidence in the coming months. Thank you for joining Explain the Charts. Be sure to like, subscribe, and hit the notification bell for more in-depth analyses.